you're generating revenue in your company, and that can be from just, good, cash flow management all the way to leveraging a bank's suite of financial products that can help you, lengthen or shorten your float depending what your end game is. I actually got into banking through a co-op program in high school, grade 13, if anyone here, I'm dating myself. My accounting prof asked me, he said, you seem to have a proficiency in accounting. Would you like to go work for a bank? I'm like, no way, I don't want to work for a bank. So I went and worked in an office and was filing, answering phones, doing menial office work. I'm like 18 years old and in an office. I hated it. I lasted a month, so I went back to my accountant and I said, yeah, so that bank thing, let's talk about that a little bit. And yeah, that was 25 years ago. So I've kind of run the gamut, and it's I guess the rest is, as you say, history. Before I start, I just want to tell you one important thing, is to please ask me questions. So this is going to stay beside me, and only the people who talk and ask me questions are going to get candy. Because, I have all this information in my head.
Wait, what's your name again?
Break the ice. Good icebreaker. Good one.
I have all this information in my head, and for me, the biggest reward I can give for myself and you is to kind of let you tap in. And I'm going to sit here and tell you things that I think you need to know, but it may be different than what you want to know. So, no questions are off limits. Just ask, put your hand up, speak up, whatever. That's why this setting is ideal, because it's an open dialogue, and we all have different experiences. So let's all share them and help each other, and have a good conversation. This is cool. So let's kind of start by thinking, why you start your own business. Most people start because they're at that stage in life where they want to give back. You want to be able to call your own shots, or you figured, I'm going to work my butt off, I'm going to go and figure out and do it for myself, and I want to control it on my own. But whatever the reason you did it because you were really good at whatever that skill is that you have. So you stick to what you're really good at. And what we're going to talk about is ways that you can leverage your partnerships with professionals around you to help you be really good at what you're doing and leverage skills around you. And all you really need to do is understand what's going on. You don't have to do the work yourself. Because I'm going to get into some really nitty-gritty accounting stuff, and I don't expect anybody to know it except the accountant in the room. But, as a business owner, you're going to get presented with a lot of information, and you're going to get bombarded with information. You're going to get bombarded with bank lingo, accounting lingo, tax, every kind of lingo imaginable. And it's just going to be coming at you, and you're like, okay, stop. I don't know what that is. But you're so caught up that you don't stop and ask, and you end up leaving the conversation going, oh my God, I don't think I understood any of that. So, and that's fine to a certain degree, because really, do you need to understand taxation law? Heck, no. Do you need to understand, how to calculate a debt to equity ratio? Yeah. Do you need to know the really ins and outs of it? Probably not, but at least take a set of financial statements, crunch out the numbers, and go, okay, so this is where I'm at, and this is what the bank wants. Okay, accountant, figure out how I'm going to make this work. That's the extent of the expertise that you as a business owner kind of need to have. I thought I'd throw just because I love looking at numbers. Stats. So before we go any further, let's determine who we are. So I took this from StatsCan website, and it's their quarterly key small business statistics publication. So some points I want to make. Look at Ontario there. Ontario makes up 35% of the 1.1 million businesses in Canada. So that's 381,000 small businesses, and they're all employed, and they're in the first column there, 1 to 99 people. Quebec
would have been more.
Yeah,
for some reason.
yeah. Well, Quebec is 21%, but they're still like 100,000 below. So we're pretty significant, is the point I'm trying to make.
Mm-hmm.
But in total, look at the very bottom. 98% is small business.
Wow.
So that's like, I'm trying to hit you guys between the eye with this, because this is so important. Think of what we actually generate for the economy as a whole. Pretty big. So I want to break down what a small business is, because sometimes this helps too. A small business, according to Stats Can, is a company that has over 30,000 in revenue, is incorporated and has filed a tax return within the last 3 years, and has 1 to 99 paid employees. So I listen to that and I think, well, that's, okay, I could be a sole proprietor or I can have 100 employees. That's huge. So let's break it down a
They're
little
really
bit more.
discriminating on a revenue basis,
Well,
aren't they?
and it's hard.
It's gotta be over 30,000,
Yeah.
like what are you if you're under?
Well, you don't have
A
to,
no
you don't file
business.
GST
Yeah.
or anything, right? Well, you're a
You should
micro
report on
business.
your
Yeah,
tax return.
it's
Okay.
personal, right?
Or those
So-
that don't file GST, which is the
You don't
financial
even have to
services.
charge GST if you're making under 30,000.
Mhm.
You don't have to.
Yeah.
Yeah. Or if you're a broker, you don't, in financial services, you don't actually charge GST. We're
Yeah.
exempt. So that, we wouldn't even fall in there.
Really?
So I want to break this down more for you guys, right? Because now I like to get I'm a little bit micro. Of the 1.1 million businesses in Canada, 55.1% have 1 to 4 employees. That's the first line there.
Yeah.
That first
That
column
makes
there is cumulative. So I want to take you up to the 10 to 19, which is right here. This one. Okay, because really, let's be honest, that's probably most of the companies that we have, deal with, or are going to be, right?
Do you have a laser in your?
Oh,
you
oh,
might
I
have-
don't know, I was screwed up.
Okay.
somehow.
Set something on fire.
This is the extent of technology I get. So look at that, 10 to 19 employees is 87.4% of all the 1.1 million businesses in Canada. That's huge.
Hmm.
So let's think about that. The businesses that are employing under 20 people make up pretty well 35%, in and around that, give or take. That's a very significant number from anybody who's in the business development business, trying to generate small business, anybody who's running a small business. That's a huge market. And our GDP, like I didn't want to bore you guys with this stuff, I just find it fascinating. 41% of Canada's GDP is small business in the private sector.
Wow.
So, we think the Pepsi-Colas and the Walmarts of the world are a huge contributor to our economy. No, it's all of us sitting around this
And
table.
I think it's going in one direction too,
Yeah,
because, the baby boomers are more and more
they
becoming
want to own their own
self-employed.
businesses now. Like,
Right.
it's. So the point that I'm telling you this is because we need to succeed. And I think the only way we're gonna succeed is if people like us get in rooms like this and talk, share ideas, talk about how we're growing our businesses and what we can do to help each other so that we can continue on and more people can follow the same path. Because if one succeeds, we all succeed. But we're here really to talk about financial management because this is very near and dear to my heart. So I thought I'm going to start with a really good dictionary description of what financial management is. It's the planning, directing, monitoring, organizing, and controlling of the monetary resources in an organization. So let's think about this, right? So you started out, you're going to run your own business, you're going to become the VP of HR, you're going to become the VP of sales, you're going to become the VP of operations, and you're going to be the CFO. You're going to be all those things, and I've just added 5 more words to that whole description of what you're going to be as a business owner, right? So let's break this down. This is what financial management is. It's managing the monetary resources in your company. So let's think about this. We've established that you're doing a whole bunch of things as a business owner. Here's the thing. You're not going to be the VP of HR if you don't have any money to pay your employees. You won't be the VP of operations if there's no money for you to buy inventory to make your widgets and ship them to your clients. And you definitely won't be the salesperson. You see where I'm going?
Yeah.
That CFO is looking pretty darn important right about now. And it is. But you don't need a fancy education, you don't need to have all kinds of training. Let's just start at the basics, because the basics is all you really need. This is why I think financial management is important. You need to understand your company's financial information. You don't need to be the maker and creator of that information, you need to understand it. Why? Because it helps you define your goals. You're going to go into business to make money. Well, what is that money gonna look like? There's a lot of things that go on in between that whole making your profit process. And if you don't understand that, there's no financial information for you to understand. And 3, you need to have targets. You need to measure your performance. So these are all very, very, very much correlated. You can't have one of those without the other. And this is, in my opinion, what I think is the most important thing for every business owner.
I think Eli Goldratt would agree with you. I came across that
Who's
book the
that?
other day. He wrote a book called The Goal, like in 1984.
Really?
Someone pointed out to me, it's probably the most important book ever written, and that's exactly what it says.
Which one do you want, Missy?
Thank you.
So I like giving people examples because I think anecdotal information sticks in your head. Let's say you want to grow your sales 10% next year. What does that look like to your bottom line? Are you saying you're going to grow your top line sales 10% and your bottom line revenue, your bottom line net profit 10%? What are you growing by 10%? You need to think about all of that stuff too. Because if you don't understand the costs that are involved in generating that revenue, you may be just spinning your wheels and you're putting out all this effort, all these resources, all this money, and at the end of the day, yeah, you grew your sales 10%, but you end up with a loss. And if you don't understand the mechanics of how that's happening, then it's all for naught. And that's probably the most frustrating thing every business owner experiences is like, oh my God, how are you telling me I have a loss this year? I did all this stuff, I spent all this money. Wait, maybe step back. What did we spend it on? Diagnose it, figure it out, have a plan. Have a plan and have a measurable and measure those benchmarks as you're going along. And monthly reporting becomes very important when you're doing stuff like that. Either way, it's one of those very simple rules. You need to have money to make money. Maria's gonna love me for this. Here we go.
That's familiar.
So this is a balance sheet. So sometimes balance sheets can be a bit misleading because it's at a period in time. Somebody did a screen print of their financial statements as of December 31st at the end of the year. That's it. So you have to take everything you see on these things with a grain of salt because see that $35,000 in the bank account? That could be gone the very next day. So everything on here is, unless it's fixed assets, you consider that as a moving target. So cash, it's most temporary. Why? It can be gone in an instant. But it does have some indication that there's a buffer for the company. But there's that caveat with it, it could be gone tomorrow. Accounts receivable, who are the customers? How frequently are they paying you? And are you financing your sales with your accounts receivable? So that becomes a very important number to look at as a lender. When I look at the level of sales, when I look at the growth year over year of sales, and I'm going to look at the increase in accounts receivable year over year. Because if these guys are extending their payment policies for their clients to generate sales, they're financing their own growth, and that could potentially hit them in their bottom line at the end of the year because they're not getting paid. The longer, banks won't margin anything over 90 days. Why? Because over 90 days you're less likely to get paid. So you got to be careful when you start laxing your accounts receivable policies to generate sales. You may be generating the wrong kind of sales. You want sales that are going to pay you. You want to have your operating line revolving nicely every month so that your banker isn't calling you going, your line isn't really moving. It hasn't moved in 6 months. We got a problem. So you got to, risk, right? And then that's when people will go and get insurance for their receivables, right? So there's ways you can mitigate those risks, but at the end of the day, it comes down with the management decision on how am I going to get these 10% increase in revenues? What am I going to do to do it? Is that the way you want to do it? And it's a slippery slope when you get there.
I love that. So if you're thinking about your collecting policies, like is there some sort of a rule? Would you try to just even cover your cost in a deposit and then maybe finance the rest?
Well,
or
a lot of it
are there any
depends.
general rules?
No, because it depends on the industry, right?
Okay, so I'm talking about say the coaching industry because I was with a client, I did the incorporation, And some of her coaching programs are paid out over 6 months.